My name is Joseph Saldana, and I know what it takes to make it in real estate. I had 2 mortgage companies till the market crashed and I lost it all. But I didn't lay down and give up. I got back on my feet, got my real estate license, and built my business, Next Home, from the ground up. But I didn't do it alone, and now my daughter Gabby is working her way up the family business.
This is the Like Father, Like Daughter podcast.
Hey everyone, this is Joseph. I'm here with my daughter Gabriella, and this is Like Father,
Like Daughter podcast.
And we have our guest number 2 here. Very honored to have this particular person come to our podcast, Ryan Riddle.
Thank you, man. No, it's my pleasure. I'm excited.
He is Cliffco Mortgage.
Trying.
Get deals done. Anytime we send someone your way, your team is phenomenal.
I appreciate it.
The communication is key, and you guys communicate very well.
Well, I think what makes it a little easy is because you were in the business and you kind of understand the stuff that goes on in between. And I think what happens is there's so many buyers that are out there with agents that really don't know or not experienced or versed in it.
Yeah.
And on our end, working with an experienced person that actually understands the business, it just makes the business easier, right?
Sure, absolutely.
So
yeah, I mean, I can see that, but you still have to do your part.
Yeah.
And you guys do it very well. You know,
Appreciate it.
It's never a hiccup. You know, I get calls from the office, from different loan officers, your processes, where was assisting on that file, and they're always on point. When I call them, they always have the information that I need. And I'll get calls just out of the blue, and they really don't have to call me, but they still call me to keep me up to date, even if there's nothing going on.
That's good to hear.
So that's very good. I definitely, your team is on point, and that's a testament, you know, that's you,
appreciate that.
that's you from the top down, you know,
appreciate
professional. I want to talk a little bit about. I know we spoke a little bit about Sony May.
Yeah.
You know, you were starting to get that information out there. There's buyers that are looking for foreclosed homes, right? And then they don't really realize the extent of it. You know, the cash, the as-is, all that stuff. So their biggest, I guess their biggest weapon against the investors is the 2 or 3K loan, which is an FHA loan.
Yep.
You know, and you have the short K and you have the long
Yep.
K, right?
Both.
Let's run us by that, how that would work for a buyer that finds a house on Fannie Mae and they want to, get a 2 or 3K loan. Is that something that, how extent should they be afraid of that? Is that an easier product than what is put out there?
It's easier than what is put out there. It's just that a lot of loan officers don't like to put the work into it, right?
Okay.
But in this environment, there's a real good way to generate business on your end and get your buyers' houses because, I mean, everything in this market is crazy right now, but you're more likely to get that house and instead of going against 50 offers on a house and not even knowing where you need to go on the deal. So the most important part of a K loan is having someone that understands it, but ultimately having the right construction crew. Because the problem is if you jump into a project, the paperwork is minor, right? As long as you're working with an organized person. It's just like construction workers. If you're getting that guy that's working out of his van, like he doesn't even have receipts. He doesn't write a bill. He just says, yeah, it's $5,000. And you can't have that person. With the right contractor, it makes it easy because they actually have to front some of the money, right? So it's kind of like hard money. You've been in the investors game for a long time, right?
Sure.
They buy that house, they lay out some of the money, they get that drawback, right? But something that we do in house is we always put a HUD consultant on it that controls it, right? So you don't have to start arguing for your buyer with the construction worker, and then I'm stepping in and the money's not showing up, the guy's not finishing the job. We kind of put our hands up a little bit, put that HUD consultant that runs the project. And it goes a lot smoother that way. But it's not something that people should run away from. And I think going into this market, when more of these homes start coming up, right? Because people are going to start evicting more, and you already see a little bit more of the REO action on the market. It's like building up a little bit.
Yeah.
It's going to be the way to go.
Sure, I agree, and you're right. You need to have the right team in place.
Absolutely.
Right, when you do something like that, the realtor, the mortgage banker, the HUD consultant, the contractor, everyone needs to speak the same language and be on the same page.
It's about creating wealth. Like that helps you create wealth.
Mm-hmm.
In this market right now, everybody's talking about the home values aren't going to go, they're not going to move that much. Like in certain areas, they're going to move.
Yeah.
You're spending $600,000 in some of these neighborhoods, like it's going to be a problem. So when with the K loan, the most important thing that people aren't realizing is they have the ability to build 50,000, 60,000, 70,000, 100,000 in equity
Yeah.
on a home, and that's, you know, for your average W-2 earner, you know, who's waking up every day doing their 9 to 5 and just going. That's wealth that you can't create somewhere else.
Sure. Inherited wealth.
Yeah.
You know, inherited equity.
Absolutely.
That's what happens. You just need to have the stomach for it, right? Because I take it back to, you know, to '08. That's all we did. We did foreclosed homes. That's all we were doing. That's between 7, 8, 9, 10. The market was all foreclosures. So you had investors with cash, and then you had a 2 or 3K loan for your first-time home buyers that wanted to get into that.
Yeah.
And now a lot of them that we did, it's great. They still have the home. They, you know, the houses, you know, they built in $50,000, $100,000 of equity. After they did it, they did it how they like it, how they want it. Listen, when it comes to construction, there's always issues.
Of course.
No matter what. But you need to have that right team. So don't be afraid to get into a distressed property, even though you don't have the cash. If you're gonna plan on living there, the 2 or 3K loan is the way to go.
Yeah.
You know, and you guys can definitely do that.
I think it's something that we could probably just build on too, and do more seminars on, because
Sure.
the education doesn't get out there enough. And
Yeah.
you know, if we started now, later on, that's where it's going to be. Right, next year, 2 years, and going forward, there's going to be more and more of them. And it's just
100%.
about, you know, teaming. Like we go out there, we find 3 contractors that are doing it the right way, right, that are organized, and you have your team there.
Yeah.
And with your expertise, I mean, a lot of those houses are going to be falling your way anyway. So
Yeah.
it's gonna drive the buyers to your brokerage.
Yeah, yeah. That information that anytime I talk about it, now it's less than before, and I agree. Within the next 2 to 5 years, it's gonna be more of that. You know, they just, you know, what's a 2 or 3K? Is it 2 loans? Is it 1 loan? Oh no, I don't want 2 loans. No, the education is very important, that they know how to, you know, what it is, that they do have that option. They don't need to have 500,000 in cash. You can get a loan at a pretty decent rate too.
Absolutely.
You know, it's an FHA rate. Would it be the same?
Absolutely.
Is there a bump on the rate for the K loan?
Not really. Listen,
really.
it's all myths out there, right?
Yeah.
Unfortunately, in our market, New York's always crazy with everything, but the loan officers don't want. They see it as extra work. They try to earn a little extra yield.
Yeah.
Right. So when you're coming to someone that is pushing out volume in units, it's just another transaction to them, right? So they don't see it as more work. It's what they do, right? So depending on who you go to, they tend to be, the myth out there is that it costs a little bit more to do the loan, but the costs actually come from either putting a HUD consultant on, or the drawers and the actual work that goes into it. But is that extra money, or is that helping you build wealth, building that equity? So it's one or the other.
That's right. Yeah.
You know, so I want to spin a little bit. I want to ask you a question.
Okay.
Right. So for the realtors that are out there, because I like to hear what the realtors have to say.
Yeah.
What are what's the most important things, or through your experience, that aggravated you about a loan officer? What are the key traits? What's some of the worst things and what's the best?
I have one thing that's bothering me right now that I was going to ask you. What's the deal with loan officers referring buyer attorneys?
I have no clue. I have no clue.
This is like the second time in like the last few weeks. Like, why are you referring a buyer attorney when you don't even talk to the guy or the girl?
I think
you have a realtor in place.
Yeah.
You know, the realtor is communicating with that buyer attorney way more than the loan officer. They never talk to, why would you talk to the buyer? If you're talking to the buyer attorney, it's because your commitment is late.
Yeah.
You know? So why are you referring a buyer attorney?
I don't know why sometimes they try to just own the transaction. Listen, they could be multiple, right? They could be getting a little, a little love from them.
But it's not a norm thing from your,
Not a norm at all.
like, yeah.
We're 100% referral-based business.
Yeah.
Like, you're our clients. Like, I want to make you happy. This is who you use. This is what you do. Like, you're staying in that realm, right? Listen, if the buyer's coming to you directly, and then it's sourcing out from you.
Correct.
But even that,
if it's coming from you, hey, listen, wherever you want, you know.
even that, as a referral partner, wouldn't you want to flow the power to your referral partner?
Yeah.
Right. Be like, hey, I'm working with you here. Like, this is, do your thing. Right.
100%.
Right. You should. Realtors are showing lenders faith all the time, hoping that piece of paper is legit. Right.
Yeah.
Flow the power back
Exactly.
to the referral partner.
100%. You know, I'm not gonna start referring bank attorneys.
yeah,
You know,
yeah.
should I do that?
Exactly. That'd be pretty funny.
The next thing would be I'll probably say when they call you and they asking about one of your properties, and then that shit is in contract or something like that, and then they say, oh, but Zillow says it's available. So my response to them is, are you a Zillow agent? Like, are you licensed with Zillow? You know, are you getting your information from Zillow? I said, you pay all this money for one key. That's
Yeah.
where you got to go to. That's where your information is. Oh, but Zillow says. I said, fuck Zillow. They don't. That you don't.
Zillow
you can't.
is
You,
so
you can't use Zillow.
inaccurate.
Zillow is just you know, that's only for consumers that are looking for you if you want to, you know. But for information, don't. You know. Listen, I have a long list, but those are the top two probably.
Yeah.
You know.
So because I was always curious, right? And I think it's on a loan officer standpoint. The problem is that a lot of loan officers are transactional.
Yeah.
Right, there's a few that are trying to build a business out of it, and when you're building that business, there's kinks in it, right? Because you have to find the right person for every position, right? It's you know you just had Charles on your last episode,
Yeah.
right? And that guy figured out how to network, go and get deals,
Yeah.
while the rest of the machine is moving, right?
Yeah.
And it's so important where the loan officers today is just so transactional and just worrying about the one deal, two deals in front of them, and not thinking about it as a business. So sometimes I don't know where their head's at.
Well, agents are that way also. That's one of our biggest problems, is that they are like transaction, just looking at that one deal. They're not looking to, you know, to build their business.
Well, I think
You know.
what you're building is agents fall in love with, my generation falls in love with the limelight, right?
Yeah.
Just what we're doing here, right? Getting out there on social media, building our brands, getting out of business, and they don't even realize. I wouldn't like some of the companies that they're jumping into. I wouldn't thrive in, right? Your company, I would thrive in. That's why I thrived at Cliffco, because it's a family-owned, operated business that gives
Yeah.
you the ability to move and at your fingertips, right? Joe's at your fingertips,
Exactly.
Absolutely. Yeah.
and
They always have access to me.
yeah, and that's. But instead, they rather go somewhere where like.
The glitz and the
they share me on
glam.
they share me on Instagram
Yeah.
a couple
Yeah.
times, or they pay for that photographer to come in for a couple $100, right? They're not realizing that
Yeah.
there's a bigger picture to it. But my generation's gonna learn. They're gonna learn real quick when things start getting tough, and
Yeah.
and who they're messing with.
Yeah, and it's unfortunate that that learning curve is going to cost them money and knowledge and information and just progress.
It's time.
You know, so you gotta have to really like, you know, you hope that, you know, like our newest agent, she did a lot of research before she, you know, decided on us. You know, so that was really, that was great that she did that. You know, she saved herself, even though she didn't start right away. She did her research, and
It's a free
you know,
mentorship.
yeah.
That's what it
Yeah.
is.
And I want them. I want my agents to all make money, to all make six figures and more and up. You know, if they're successful, I'm successful. I want to be successful together. You know.
Yeah.
We wanted to ask you a question about.
So like when a buyer comes to me and they're like, what are the rates? What is like the most simple kind of way to explain it to them so they're not like all flustered?
That's a good question. So, and this is part of like what we should be doing is we should be educating you, right? Like you guys are selling us, so we got to educate you on how to sell us. But unfortunately, there's so much information at everybody's fingertips. Just when I was sitting in the office before I was coming here, it actually popped up on Instagram. Someone's advertising the interest-only payment for the first 5 years of the loan, and the rate's still like a 279. Like that doesn't exist, right? So
Yeah.
everybody is so Google educated that it almost gets confusing. But when it goes to rates, it's, you know, my answer that I give everybody, it's not always, the best rate doesn't always get you the best payment or the best option. What I
Yeah.
can tell you is that they're a direct lender and they're lending their money and they can help you get the best deal. But it's not always about the rate. Are their rates super aggressive, to answer your question? Yes. Right? But it's not, the best rate is always not the best program or payment. And that's
Okay.
kind of how I do it, because unfortunately, there's some clients that come in and we just have to I just have to get to the point and give them a payment that they like, when truthfully they have another 60 grand in the bank. And if we use some of that, I could actually show them how they can save 20, 30, 40, $50,000 in interest later on down the road, but they don't want to hear it sometimes.
Yeah.
Yeah.
So it gets, it gets tricky, and where the industry gets a little confusing is when I talk to agents all the time, especially new agents, and they're like, you know, I was referring clients here and their rates were high. Unfortunately, there's compliance in the mortgage business, right? Everybody's got their Reg Z.
Yeah.
Depending on, in New York, it's like everywhere but New York runs off the Reg Z, but when you come here, it's like you got to give the house away, you know? But depending on where that loan officer is, that team, that company, how much volume he's doing, affects his interest rates.
Right.
So it's like the real estate market, right? Like now you were doing the deal with Charles. You guys are doing some podcasts together. You're communicating, right? It's easier to do that deal, right? It's the same thing when you have that loan officer that is in the position of power. They can give out whatever deal they want to give out, you know.
So the experience is important, and that
It's the same thing, right? Like if you when someone goes when you get an REO and someone goes to make an offer and you never heard of the agent, or you got an agent that you know communication's good, their deals go through, right? It makes it a little easier to do that transaction.
100%.
It's the same way.
Listen, if it was up to me, you would do all of my deals.
Yeah, for real.
Brian, thank you for coming. I
No,
appreciate it,
thank
brother.
you.
I appreciate it.
I appreciate
Thank
you very much. My clients appreciate you. Our clients appreciate you. The agents
Definitely.
appreciate you. You are the cream of the crop.
I appreciate that.
Yeah, your cream rises.
You guys too. You guys too.
Thank you.
Thank you for watching the Like Father, Like Daughter podcast. See you next time.